Most people spend months planning where to live, what to pack, how to ship their stuff, and almost no one spends enough time sorting out their money. That's usually the thing that causes the most stress in the first 3 months abroad. Today we're fixing that. This is the financial checklist every expat, digital nomad, and person planning to move abroad should go through before they leave. Not after they land. Not when a problem comes up, before. Because the reality is, managing money across borders is genuinely more complicated than managing it in one country. Different banking rules, currency risks, tax obligations, insurance gaps. Most of these things are completely solvable, but only if you deal with them on your own terms. Not in a panic when something goes wrong. We're going to go through 10 areas, one by one. Some will take 5 minutes to sort. Others will require more thought. All of them matter. Let's get into it. First, your emergency fund. This is always important, but abroad it becomes critical. Why? Because when things go wrong in a foreign country, they tend to be more expensive and more complicated to resolve. A medical visit you didn't expect. A flight home for a family emergency. A landlord who wants 3 months of rent up front. A gap between jobs or contracts. The general rule of thumb is 3 to 6 months of living expenses. But for expats, I'd recommend leaning toward the higher end, 6 months, especially in the first year. The learning curve of being in a new country is real, and having that buffer means you can make decisions clearly instead of under pressure. Keep this fund in a currency and account you can access immediately. Don't lock it in a fixed-term deposit. Don't keep all of it in a currency exposed to unnecessary volatility. Second, your banking setup. The first question is, what do you do with your home country bank account? Keep it open. Seriously. Even if you're leaving for good. Having a local account back home simplifies things, like receiving payments, keeping existing direct debits, and proving financial history if you ever need it. The second question is, how are you going to bank in your new country? If you're in a country with a straightforward residency process, opening a local bank account is usually possible once you have your address and ID documents. In some countries, it's easy. In others, it takes months. In the meantime, or as a long-term solution, digital banking platforms designed for international use are worth setting up before you go. We covered Wise, Revolut, and Payoneer in detail in episode 1, so check that out if you haven't already. The core principle: don't arrive somewhere with only one way to access money. Always have a backup. Third, your cards and transaction fees. Standard bank cards often charge foreign transaction fees of around 1% to 3%, with many traditional cards sitting near the middle of that range. On top of that, ATM withdrawals abroad can carry fixed fees, plus a poor exchange rate. It doesn't sound like much, but if you're spending $3,000 a month, even a 2% fee is $60 a month, over $700 a year, just gone. Before you move, make sure you have at least one card with no foreign transaction fees and decent ATM withdrawal limits. Wise and Revolut can reduce or eliminate foreign card fees, though ATM allowances and charges depend on the plan and the country. So check the specifics for your situation before you rely on it. Also check, does your card work in the country you're moving to? Not every card network is accepted everywhere. Fourth, health and travel insurance. This is the one most people either skip entirely or leave until the last minute. And it's also the one where gaps in coverage can cause the most financial damage. If you're moving to a country where you'll eventually have access to the public health system, great, but that usually takes time. Residency paperwork, waiting periods, registration processes. In the meantime, your coverage may have gaps. A few options worth knowing. Your employer may cover you if you're working internationally for a company. Worth checking the policy details. International coverage varies a lot. Local private insurance in your new country is often the long-term solution once you're settled, but can be complicated to arrange before you arrive. For the transition period, or for people who move frequently, travel medical insurance designed for expats and nomads is a practical middle ground. Safety Wing is one of the more well-known options in this space. Some plans are designed to work flexibly, more like a rolling subscription than traditional annual insurance. But check the countries covered, deductibles, limits, exclusions, home country coverage, and whether it meets any visa requirements. The key point: don't land in a new country without any medical coverage. Even one hospitalization without insurance can be financially devastating. Fifth, visa requirements and proof of funds. Many visas, whether it's a digital nomad visa, a long-stay visa, or a residency permit, require you to demonstrate that you have sufficient financial resources to support yourself. The exact requirement varies significantly by country and visa type. Some want to see a certain monthly income. Others want a lump sum in a bank account. Some want both. The practical advice: start gathering this documentation early. Bank statements, income statements, employment contracts, proof of savings. Some of these take time to obtain in the right format. Also, if the requirement is for funds in a specific currency or in a local account, factor in the time and cost of getting money there. Sixth, tax residency. This is the one most people forget, and it can have consequences that last years. Tax residency determines which country has the right to tax your income, and it doesn't automatically change just because you moved. In many countries, you remain a tax resident until you formally deregister, notify the tax authority, or meet specific criteria to break residency. At the same time, your new country may consider you a tax resident after a certain period. Some countries use day count tests, others use broader residency criteria, such as your home, family ties, work location, or center of economic interests. Many use a 183-day threshold, but the rules vary significantly. That can create situations where two countries believe they have the right to tax the same income. What's known as double taxation. Tax treaties between countries exist to reduce or eliminate this, but navigating them without preparation is painful. Before you leave, find out what your home country requires to officially end tax residency. Understand the rules in your destination. If your situation is complex, freelance income, investments, multiple countries, make this one of the first things you verify, not something you leave until after the move. Seventh, currency exchange strategy. If you're earning in one currency and spending in another, exchange rate movements directly affect what your income can buy. A 10% shift in the exchange rate can materially change your purchasing power, though the real impact also depends on local prices, inflation, and any fees involved in the conversion. A few practical principles. Airport exchange desks are often worse than specialist platforms like Wise, though the margin varies by location and operator. Avoid them for large amounts. Platforms like Wise show fees up front and can often be cheaper than traditional bank transfers, especially for international transfers. But always compare the live quote before moving large amounts. If you have predictable large expenses in a foreign currency, rent for example, consider whether it makes sense to exchange money in batches when rates are favorable, rather than converting small amounts constantly. Eighth, Income continuity. One question that often doesn't get asked until it's too late. How will you receive income once you're abroad? If you're employed, check whether your employer can continue paying into your existing bank account, and whether that creates any tax complications. If you're freelance or self-employed, check whether your payment platforms work in your new country. Some payment processors, invoicing tools, or client payment methods have geographic restrictions. Also, think about what happens if there's a gap, a delayed contract, a client who pays late, a payment that gets blocked. Your emergency fund covers the immediate shortfall, but you should also have a clear picture of your income timeline and any potential disruptions. Ninth, subscriptions and fixed costs. Go through every subscription and recurring payment you have. Streaming services, software, gym memberships, insurance policies, professional memberships. Some of these won't work from your new country. Some will be useless. Some will keep charging you without providing any value. Also, review your fixed costs at home. Storage units, car insurance on a vehicle you're leaving behind, a mobile contract you're not going to use, canceling or pausing, these adds up. Finally, update your billing address on everything that matters. Expired cards and address mismatches are a reliable way to have a payment fail at an inconvenient moment. 10th, your backup plan. Not because things will go wrong, but because having a plan means you never have to make financial decisions in a crisis. Ask yourself, if I needed to return home unexpectedly, could I fund it? If my main income source stopped tomorrow, how long could I sustain my current situation? If I lost access to my primary bank account, what would I do? The answers don't need to be perfect, but they should exist. A second account with a separate institution, a credit card with available limit, a clear sense of your financial runway. This isn't pessimism. It's the difference between someone who moves abroad confidently and someone who moves abroad anxiously. That's your financial checklist: emergency fund, banking, international cards, insurance, proof of funds, tax residency, currency exchange, income continuity, subscriptions, and a backup plan. 10 things. Most of them take less time than you think once you actually sit down and work through them. The ones that take longer, tax residency, insurance, visa documentation, are exactly the ones that cause the most damage if you leave them until you're already abroad. Some links in the description may be affiliate links, which means the channel may earn a commission at no extra cost to you. Subscribe to Digital Wealth Map for practical finance content for expats, digital nomads, and people building money across borders. New video every Thursday. See you next week.